nice little weekly update. It's a little bit late right now, but money doesn't sleep. So I'm looking at this 39.92 level on the TNX here. This is the Treasury yield tracking the 10-year. So it has a nice little bull flag up here. It had a nice little pullback as any uptrend would do. So if we can break this 38 level with confidence, 38.25, and head towards that 40 mark, that's pretty bad. So this is inverse to the market, which leads me into my S&P 500 analysis here. I got a lot of stuff over here drawn on the weekly chart. I love it. We got rejected at this level. I posted about this a long time ago back in August about how we would probably reject this level right here. If we broke it, we'd be bullish, but if we rejected it, most likely we were going to be on the downside. That's exactly what's happening here. We had a little repeat from a rebound rejection and then a much lower process here. Notice this candlestick right here. This kind of bullish engulfing. It looks like a nice reversal, and it was a fake out, right? So we had a nice little sell-off, and then we tested new lows there. Then we had a nice little breakout relief rally in the bear market, and now we're doing this again. So this little bullish engulfing pattern right here looks pretty similar, but here's the fake out to the downside. I still think there's a little bit more room to go, but I don't think there's that much. If you look at this one, it broke this low, had a big, massive red day, and then there was a little bit of a relief rally, a little bit of chop, and then boom, right? So I think there might be a relief rally coming here pretty soon, but I don't think it's the complete rally just yet because there's a lot of stuff going on in the economy with inflation, unemployment numbers, potentially a war talk. We got the interest rate hikes coming up. There's so much going on in the economy right now, so we just have to be careful, take what the market gives us, but don't forget to start scaling into some of these really cheap assets for the longer term. Getting into this day trading stuff right here, we broke this major support line of that 359 test that I had back at this 831 level of 2021. And now I'm really looking at this level, this body, and this body, this support level around that 350-ish range. If we are weak, I think we could retest that. And if there's no bounce at 350, I think max pain, we see this 340 level, pre-COVID levels. Pretty crazy that we're all the way back here 2 years later, but that's what I'm really looking at. This 352 level is really on my big watch list this week before we get a nice little bounce. So I think that we drop down, if we're still weak, around that 352 level. And then from there, I think we could bounce for a little bit and have one of these little relief rallies. So just start to be careful now that we broke down some major support lines. We're probably not just going to completely get decimated. We are easing into it, even though the Federal Reserve is kind of hiking it aggressively. We're not just going to completely die. Nothing's going to happen like that unless we go to war, which is, don't count that out, just saying. 351 level, 352 level is really important here. I think that support line is a pretty good one to chalk it up and be like, okay, if there's not a lot of weakness down here and it's starting to chop to the side, we might get one of those relief rallies. So just be a little bit more careful down here now that we've fallen this much. So 352 support level, look for a little bit of a bounce. If we break below that, 340 is on the way. I'll look at it on the daily chart right now so we can zoom in a little bit. Still looking pretty good. If we break to the upside, I'm looking at that 362 break, and then above this 367, we could see that 370, and then this is the gap fill I'm looking at. So I don't think we're going to get this week, but I do think that we might get this 352 test and then a rally maybe up to that 373-ish range for that gap fill. So we'll talk about that in weeks to come, but watch that 352. QQQ, very similar story here. I think we have a lot more blood to go on in this one. It's kind of lagging behind a little bit, and there's a 260 support level. Same thing, I think we drop to that 260, then maybe have a little bit of a relief rally. So take what the market gives you. There's some pretty big gap downs already, so that's $7 from where the TQQQ closed. Or just the QQQ, sorry. TQQQ is my money trade for the long term. And then 350 down here. So we have about $7 in both indexes, I think, to the downside. But a good way to track that is if there is some good strength of the TNX and the DXY. If it breaks that 115 and we see that 120 high, then the DXY is very strong. Inverse to the market, markets will pull back. And then I think we see those $7 drops in the indexes. So take what the market can give you. Not too much going on. We got huge unemployment data on Friday, and then after that, it's really kind of up for grabs on what the Federal Reserve does on October 13th. We think that it's going to be 50 basis points. Hopefully we get a nice little low tick on unemployment, and inflation is starting to scale back a little bit because people are running out of money, and this is getting out of hand. So 350 support levels, watch for that, but a relief bounce is coming pretty soon in my opinion. So watch out, 350 and QQQ 260. Hope that helps, and let's make some money.